So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here, 12th of August, 2020. No trade calls or recommendations. We're responsible for our own stuff. We're here for educational purpose only. Sessions are recorded. You can email the recording as soon as it's over. As long as you use it for your own personal use only, nobody will be blocked, nobody will be banned, and we'll all behave as one big happy family. So, welcome back on our usual holiday week. So, here, as I said, I'm going to record the first 10-15 minutes of every session this week and post it on YouTube, and then we'll go into a little bit more detail on some of the trades and review some open stuff. Where are we? What's going on? Well, so far so good with our base case scenario. Let's see what happens today. So we're talking about the fact that NQ, right? So basically our base case scenario here is that tech will start to see tech underperformance, right, as we go forward here in the next 2 months. And essentially those big tech names topped, right? The top on FANG was on, let me get it up, July 13th, right? So this was the July 13th, right? And you see we've kind of hovered there, and if you remember correctly, that's the day where we had those big reversals in Netflix. That was that day when we were live and we talked about, essentially Tesla, that, that was pretty much, we expected it to be it and start to kick all these things off. So that's still holding. And as we're seeing yesterday, again, that underperformance is still in play from the NASDAQ. Now, the other thing we talked about is we had those shorts on the NASDAQ, and we're looking for, tactical scalps, but expecting that they could get traction all the way back into 10,500 or the 10,000 mark for, roughly speaking, a 5 to 10% correction. And that's in play. We're very cautious as we were holding above these previous highs, right? But we said the moment you lose those highs, that it's going to be time to try and be a little bit more aggressive. And yesterday, indeed, what we got the close below those, not only below those highs, but also below the 10-day moving average that we were focusing on. So here, for this move to stick, right? For this move to stick, naturally anything can happen, but ideally, in terms of a textbook scenario, today we want to see some kind of attempt to press this higher, some kind of attempt to pump this, but we want to see sellers step in at that 10-day moving average and at those previous high. And we want that to hold from a closing basis, but ideally we want to see an aggressive selling or size selling come in at that level, and that is going to be the focus for today. Okay. Now, also, what we've seen that also we've seen the others reverse. We talked about ES, and our focus was, well, we had the discussion about, somebody asked, if I remember, is ES going for those all-time highs, right? Is the base case scenario that ES is going for those all-time highs? And what we said is, well, it may sound like I'm going to say the same thing, but I look at it differently, right? I don't look at anything as a foregone conclusion. I'm just looking at reaction at levels. So what we said is, as long as we hold above that gap fill zone, path of least resistance is for sideways chop to grind higher to try and take a stab at those highs. If we can't and we close below, then we would expect it to try and come back down towards the 32.29. But there's no, we're looking at reaction at the levels. So here, expect them to try and pump this today. Again, we far prefer shorts on NASDAQ, but we're still stuck inside this range, right? So ideally, what you want to see here is basically yesterday's highs hold and this roll close below these 3338s, below the 10-day moving average, and that should open up the move to 32.29 and possibly 31.33. Here, I think a lot of people are going to be coming into the day looking for selling ES, selling YM with stops above yesterday's highs. I still prefer, if I had to take that trade, I'd still prefer the wider stops. But again, I'm still far more comfortable with the NASDAQ here. But again, the levels haven't changed here. And you can also see here, if you look at the YM, they smacked it down right at that high, that turn point that we were looking at. But you see how it's holding above. So I really think these may, you're going to see a lot of wheeling and dealing in these before they turn. So I still prefer the NASDAQ. Now, the main theme was this NASDAQ underperformance, right? Now, that what goes hand in hand with that, and we discussed this in detail starting from last week, Sunday and so on, was DXY strength, right? And what we said is watch for an acceleration of the DXY strength, because what we would expect to see was to see a day where you got stocks down, gold down, silver down, bonds down, crude down, right? Basically all these correlations going to one, and it'll probably catch a lot of people off guard. So what you want to see now is if that continues, if the de-risking continues and as everything gets sold, then you have a lot more of a chance for acceleration on these equity plays, right? However, don't expect that to be a standard feature, right? Really, I think the most interesting chart in terms of you're looking at the other charts to try and get a feel for what's going on are going to be the bonds in general, right? ZBs, UBs, ZNs, everything's the same thing. And what we said yesterday and what we've been looking at is, again, the failure here of this ramp to break down and give us at least a correction back into these. But we would not be surprised to see this unwind, this whole move, right? And that's the key focus. So you can look at ZBs, UBs, ZNs. It's a very similar scenario. And what you want to watch here, if you go on if you pop up the 10-year yield, and this is what a lot of people are going to be focusing on, is you see how, inverse chart, this is so key, right? If, urgency aborted, or no big deal, false alarm, if you start to see the bonds get smacked down again. But, if you see these continue to rally back up, I mean, similar to gold, we expect these to get smacked down sooner or later and gold get bought. But here, this is the dynamic you want to watch, right? This is really the dynamic you want to watch going into today. So it's going to be a must-have on the chart, right, in terms of the bonds. And we'll look at some trades. Somebody remind me later on the bonds that could be interesting. Yesterday we said there is no way in hell you want to try and be cute and get long gold. We discussed the dynamics and how they were trading and how gold and silver, they just smashed right through those DS3s. So knife through butter. And that's usually a sign of any new low possible. You do not try to scalp these to the upside. You do not try to get long. You wait for them to turn, and you wait for them to turn at a key level. So if you remember on Sunday, what we discussed was the turn on gold and silver, and that we would have zero interest in trying to catch these ahead of the 92.20s. And for, again, yesterday we detailed the 4 steps into trying to build back positions on gold. So you see for now, that's what, it's holding exactly where it needed to hold, right? Where you would expect it to hold. And, now we'll see what shapes up today, but this is going to be a key level. But so that's interesting also. The other thing, in terms of buy the dip, as we were discussing yesterday in the webinar, right? You get to a point where even the uber bears start getting so desperate or saddened by the fact that the dip keeps on getting bought, that all of a sudden even the usual suspects on Twitter will start saying, okay, got time to buy the dip. And when even the most uber bear guy starts to buy the dips, you get that flush. So as I said yesterday, be careful, because it's the day you get those uber bears saying, okay, don't worry, the dip's going to get bought. That's where you get that 3 to 5% down flush, right? So that's, the longer it takes to have that, the closer we are to having one of those days. And what's interesting yesterday also, if you looked at the action in crude, right? We talked about the fact how crude was reacting a little bit differently, and it was getting bid hard. And then you saw at the end of the day, you see how quickly we talked about all those correlations go to 1, it got sold, and then it actually closed back down negative on the day. Now here it's getting pumped, but this still remains a very interesting zone for crude. But again, rather than try to short crude here, rather than try to short ES here, rather than try to short YM here, which all very similar dynamics, I'd much rather stick to those original NQ shorts we've got on and ride those, because remember, as we've discussed many times, sometimes the best trade on the board is a trade you're already in, okay? Now, other things which I would say are interesting for today to keep an eye out for is Euro GBP here. Again, the action across the board on all those Forex pairs, but again, don't make it harder than it should be. It's all about NASDAQ. It's all about this rotation. And if the rotation starts to, keeps on going, or you see that weakness and you see hit and runs on the other indices too, and how that ties into the theme of, sorry, let me bring up the chart, the DXY correction, right? And again, watch how this trades. It's all about these 10-day moving averages, very important across the board, okay? Let me stop recording this so I can post this on YouTube. This will be hopefully getting some good karma with this, paying it forwards, and it will upload in tight.